What's going on, guys? So every single time we're trading New York session, we're always getting headlines when it comes down to Donald Trump. He's either talking about tariffs or he's talking about Russia-Ukraine war that is going on. And it's been like this since January, right? So trading New York session, I could see for a lot of people, it can be tough. But I just want to give you guys an example of what happened today, right? Just like an example of what happened today that could give you the best opportunity, right? For when you're trading news headlines, first, it's important to have access. How can you have access to these type of headlines, right? So this is just an example of my news terminal. And just like what I like to do for the members as well, if I'm not on the live call, like you're gonna get access to the screen. So probably a little hard for you to see it, but news headlines are right here to the left. This is strictly from Reuters. And you get to see, like, right here is about Donald Trump. And these headlines is what really helps you take advantage of opportunities, right? Because soon as you see Trump, you kind of get the idea of, okay, let me pay attention to what he got to say before I even enter a trade. Or if I'm in the trade, I want to know if this headline is going to help my direction or not. So, as an example, right now, this comment that came out about tariffs, right? Right here, where he says there will be flexibility on tariffs, right? That that question alone about flexibility, that is de-escalation from what the markets was anticipating. Because we have a timeline, which I'm gonna show you guys later. We're just gonna talk about that timeline of when tariffs started, but it's basically reciprocal. So he's been saying this the whole time, but the flexibility part was new. This was today, this was new, right? But these comments is kind of not as aggressive or what like the market's using it as destructive as what we was thinking when it first started, right? Because when he first started tariffs, we was expecting him to tariff everybody, and he is. But we thought he was going to put so much high tariff percentages on these other countries where it was just going to cause disruption, right? It was going to cause other countries to actually come out and retaliate. And that was the fear. And obviously, markets has been pushing lower due to the tariff uncertainty because of that alone. It's uncertainty, right? So with these headlines that came out, this came out around 12, right? So with these headlines, this is what I was looking for in order to take advantage of a tradable opportunity. But first, understanding where this was de-escalations on tariffs, right? This was not as aggressive as expected. So having that understanding, right? This is why if you look at my Instagram, you'll see that I took advantage of the buys on GJ down here. This was my opportunity for taking a trade because we was pushing at that support. But the moment he said that headline, right, I was expecting weakness in the yen currency. So this is why I was able to take advantage of the buys. And that was my last trade for Friday. I took advantage of that whole upside. And there were some members that also took advantage of equities, right? Because when we get those tariff headlines, we understand that equities are also being it's directly impacted towards equities overall. And just on a higher time frame, you could just see that Nasdaq is testing that support. So when those headlines did come out, that's what gave us that extra leg to push to that upside. This is why we see a risk on market. This is what really created that risk on market. As you could just look at price action right here, we had a nice order block structure hold. And when those headlines came out, this is where we got that upside to continue throughout the rest of New York session, right? It was really because of these headlines. I wish that this came out on Thursday or Wednesday because this would have caused more of a risk on reaction for the rest of the day. But just to help you guys out, understanding what risk on, risk off means, right? If we want these headlines coming out, expecting an overall risk on market. So this is why if you look at US 30, NASDAQ, S&P, you look at other equities like Euro, Germany, all pushed higher from that headline. You want to see equities push up. right? That is the first signal. Then you want to look at your safe haven pairs and your risk assets. And I'm gonna show you this chart right here. You want to see obviously you want to see AUD, NZD push up higher, right? And CAD push up higher. Then you want to see weakness in your safe havens like the yen. You want to see weakness in the Swiss. Also, you want to see weakness in the dollar too. Pound and euro is more neutral, but typically sometimes, say like 60% of the time, if we get a risk on market, you will see that the pound would gain strength. Euro most likely would gain strength. We get a risk off market. 60 to 50% of the time, you see pound get weaker, euro get weaker. But from this alone, I was expecting the yen currency to get weaker. So this was a risk on market for me when it came to those headlines, and that was the reason why I was willing to take advantage of it. But just looking at the markets overall, just starting off with equities, this this reaction on tariffs pushing equities bearish, it's all due to uncertainty just impacting the markets. And all of that uncertainty, because we just don't know what's going to happen, it's allowing other central banks to remain cautious, right? And that cautiousness, especially with other countries, is looking to retaliate. This is why when he talks about tariffs every single day, it is why we see these massive moves, right? If he's either, you're just looking for two things, just take these notes. If he is escalating tariffs, right? Like an example, if he is including other countries, like when he did it towards Europe, right? He put what it was a 25% tariffs on European liquor, like or their wine, even though it's just wine. It's like, why is that such a big deal, right? But that is a escalation, and that's why we continue to see equities push to the downside. Also, because they fear that this is going to cause a recession. All of this is going to cause global uncertainty. Like it's going to cause a recessionary fear, So that slowdown in the economy is all speculation. We don't know yet, but we're going to know on March, most likely after April 2nd, when it all comes into effect, right? So just understanding that part, it would help you get an edge in the markets, and like a just having like a timeline does help, right? So when he announced tariffs, right, just understanding it, you don't have to really go into detail about it, but at least just understanding when the announcements come out, is it good or bad? Because once you understand that part, it's going to help you take advantage of the best opportunity. So when he announced tariffs the first time, he was imposing it on Canada and Mexico. The CAD currency definitely dropped, right? And also the peso. And because if you look at the CAD currency for this year, right, which direction is it going? As you could just look at it, this was the start of the year. We did push up. As soon as those tariffs came in on January, you could just see that the CAD currency just been pushing bearish and bearish and bearish, right? So that alone, when you're trading those currencies that is directly impacted, does help. Like another example, if you know that Mexico is being included in this, you're probably going to want to look at a pair like USD peso, because the USD currency is getting directly impacted, and then also the peso. So when those tariffs came in place, right, dollar rise, dollar rise. Why? Because it was a safe haven. That's one of the reasons why. And then the peso gets weaker when the dollar rises, because we know that the tariffs is directly impacting the Mexican currency. So as you could just see back then, like every time he announced it, right? This was in January when I showed you there, that big spike to the upside. You can see he most likely announced it again in March. And then down low, we can see it continue to push higher too. Not like wait, because when it comes to the tariff situation when it's with Mexico, that is actually that conversation is getting a lot easier in the markets than it is with Canada. Like with Mexico, it looks like they're getting to a better of agreement than it is when it comes to Canada. Canada is doing more escalations, and they're trying to involve Europe to retaliate when it comes to tariffs as well. So most likely we need to be up to date when it comes to that. But you could just see here just the timeline when the Prime Minister of Canada, on February 2nd, you can see that Canada will place 25% tariffs on U.S., pretty much on U.S. Imports as well. But when Trump is doing it, is reciprocal. That is all he's telling them. What you charge us is what I would charge you, right? So if it make common sense, right? So if he is concerned about the tariffs is going to destroy us, so then the only option you have is to lower the percent of tariffs that you're putting on the US. So I feel like most of this is just political theater, just like the rest of us. It's just theater, right? But that's all he's saying is, and he said it today too, is reciprocal. It's just, I would charge you guys what you charge us, right? A lot. And if you want to not deal with it, build in America. That's what he's saying. So that's pretty much how it's going to go moving forward. And as you can see, like Europe looks like it's going to be, we want to see what goes on with Europe when it comes to tariffs. I've been looking at that for a better tradable opportunity, right? Because he only charged tariffs on European wine, right? But you can just see here, February 11th, the European Union vows to respond to the tariffs. So this is like a really good timeline that is just going on every single. It's just every day, like every day in March. You can see the third, the fourth, the fifth. Like it's been hell trading at New York session, right? Because the problem is, when we're trading New York session, I'll do this in another video when it comes to like trading economic data, right? It depends on the type of data that you're focusing on. Because if you, this is like what I like to do with the group. And if you guys are interested, I have the link in the description so you guys could follow this as well. Understanding if he's going to speak today and what time, right? So we could be aware of the headlines, we could watch it together, and then really understanding what type of headlines are important that could really drive the markets. Because the goal is just to be patient during New York session, right? Depending on the type of data that comes out, that's how you know if the market's going to care for the data or not. And typically, when it comes to economic data, I like to focus on, okay, what is extremely important, right? So like an example, if we're like what I like to do for the week ahead, because I'm starting fresh this week, but if we have, say for instance, if we have like a rate decision coming up, right? Like this was the Fed press conference we watched together. Obviously, whatever Trump says, it has to go after the fact. Or if we have anything like inflation or important labor data, that's when New York session is going to focus on that event. But if it's just like retail sales, consumer confidence, equity markets, gold, US dollar, dollar may react to the data, but equities may wait until Trump says his comments. Okay? So now when it comes to like entering, I showed you the entry that I took when it comes to GJ, right? So understanding again, yen pairs is most likely going to react, and also equities is going to react. So how could you enter that position, right? If you're looking at headlines and you see the headline that came out. So we understand this area support was holding, right? So depending on how your technicals are, it's completely up to you. Everybody is different when it comes to technicals. But I like to see breaks of structure. So if I could see a break of resistance when that headline comes out, right? These two areas of resistance getting broken, that gives me a further confirm, right, that the market is looking to go in my direction. And then I have a reason behind it. And that's what's key. Do you have a reason? So him saying that tariffs is going to be flexible, that I'm willing to negotiate when it comes to tariffs, that seems more optimistic. So seeing the markets react as a whole, equities pushing higher, then you see that the yen currency, the safe haven pairs are getting weaker. So not just equities you could look at, also pairs that is impacted with the yen. So even an example like AUD JPY, right? Because we know that AUD is a risk asset, and during risk on markets, it causes price to push up. So same thing at 12. You could just see right here when those headlines came out, price started pushing up because of the weakness of the yen, and then we get in strength in the AUD currency. So that's pretty much how you could take advantage of those opportunities when those headlines come out. Okay, but just being alert, being aware, and guys, like it's important to have any news headlines that could just really help you have an edge. This is why, us having this is really, it's extremely important why we have this terminal here, because it this is what separates us. This is where we're just on top of the markets. We got economic data, we got the headlines in the background and news events. But when those comments come out, The goal is to know exactly what to do. All right. So when it comes to these tariffs, moving forward, it still depends because when it comes to Trump, he's like it depends on which side of the bed he sleeps up on, right? If if we see that this continues when it comes to down to him making it flexible, right? And we actually see more of him de-escalating those fear narratives of tariffs. I would think that would cause equities to continue to push higher, especially if we get economic data moving forward supporting more upside for equity markets. I think that's going to be the key factor for us looking for those buys to come back into place because right now the sells is all because of speculation of market fear. But once we can see that that fear starts to ease off, that's where we can start looking for those buys to come back in place. If we see that tariffs is becoming to be more of an issue, more of a problem, and we see that as a no-brainer of problem, that's when those recessionary fears are going to come back. That's when we start taking sells on equities. All right, guys. Hopefully this was helpful. If you guys like more of these updates, send me a comment, like, and subscribe. Also, if you guys are interested in my private Discord group, link is in the bio. Have a good one, guys.